Welcome to the KPC Smart Money Podcast with Kevin and Karen Christ. Well, we love to do more fun living style podcasts, but with everything going on right now, we thought it would be time to do a podcast on the economy today because we're getting a lot of questions about it. People are concerned. And so, Kevin, why don't we jump right in? And I know you wanted to talk about the definition of an economic cycle and where you think we are right now in that cycle.
You know, Karen, I was supposed to learn that in Economics 101. I'm probably sure I did, but that was a long time ago. But and then I had to take my securities exam, they brought it up again. And they talked about the economic cycle and, you know, how that relates to the stock market and so on and so forth. So here's a little Economics 101, all right? When we talk about economic cycles, you know, we can try to blame that on, you know, the current president, and that's sometimes a fun thing to do, and we might say that's part of the problem, and you know, I won't give you my opinion on that, but let's just suffice it to say that if you look over the last couple hundred years, the economy goes in cycles, okay? And I want you to think in your mind, think of a clock. Right, so the economic cycles, if you hear the talking heads on, you know, Fox Business News or CNBC, and they talk about the economic cycle, this is what they're talking about. At the top of the clock, or 12 o'clock, is the peak. So the economy goes from peak to trough. What is the trough? Trough is 6 o'clock. So 12 o'clock is the peak. The trough is 6 o'clock. So you might say that 2008 was the major recession, and you know, the mortgage debacle, and everybody lost a bunch of money in 2008. That was pretty much the trough, right, Karen?
Mm-hmm.
Okay, so what's in between? What's at 3 o'clock and what's at 9 o'clock? So it starts at the peak, and then you start to have a recession. It starts going down the recession.
That's your 3 o'clock.
Yeah, your recession is at 3 o'clock, right? And it's moving downward around the clock until you hit the trough. The trough is at the bottom. What happens when you get through the trough? That could be like, for instance, 2009, right? Or back in we had a very bad time in 73, 74 era. 1975 was recovery, started to recover. So it goes peak, recession, trough, to recovery, and back up to peak, right? So I want you to just stop and think for 1 second. Where are we now? Okay, so what are people saying? People are saying to you, I know they're asking you too, Karen, are we in a recession?
Are we in a recession? And then you hear people say, oh, it's temporary. And I think people at this point realize there's probably not much that's temporary about what's going on because of inflation. The consumer price indexes, they are getting hit in the pocketbook. So they really don't care what people are trying to tell them on, you know, the news or talking heads. They know what's happening to themselves in their budgets.
Okay, so Karen, are we heading into, you know, this is what I hear a lot. Are we heading into a recession? What is your just your opinion without a lot of facts and figures? Just your gut feeling. You're a smart person. You've lived through these things. What is your feeling about where we are now?
I think we are in a recession. And, you know, when we had the COVID dip in the stock market, it was intuitive to go, yeah, but we can recover because this is pandemic related. It's not about the actual infrastructure of businesses and the economy.
Good.
Now where we're at is entirely different. We have got massive overspending. We have got inflation. We have got, I won't get too political. We have lots of factors that are not beneficial to our economy.
This is our podcast. We can be political if we want.
Okay. So the idiot in the White House shut off the gas pipeline. So we're no longer gas independent. So now we're dependent on our enemies. Now you got to.
We were the largest producer of oil in the world.
And so, but hey, let's give Russia a pipeline. So now Russia decides to get in war with the Ukraine.
And let's send our reserve barrels of oil Let's send our reserve oil to Europe.
Yeah,
what have they ever done for us?
They tap our reserves, which are supposed to be for us, and they send them to Europe, and you've got them printing money as if there's no tomorrow, which is causing the inflation, which is causing your dollar to have less purchasing power. So now are you sorry you asked for my real opinion?
Well, we try not to get, talk too much about political things and religious things but I think most of you are regular podcasters with us. You pretty much know where we fall on both of those subjects. And so, but back to the economic cycle, okay, regardless of who's in the White House and whatnot, the economy does go in cycles, and we've had a really good run for a long time. And if you want to relate that back to the stock market, I mean, just look at what your 401ks and your IRAs and all your portfolios have done, right? Look at what's happening in real estate. All of those things. We've hit the peak. We're on the downside of that now. Look at the stock market. Look at what's happening. The only thing that's keeping us propped up is the only thing doesn't match, that's unique about this time, is that the unemployment figures are still good, right? So but the figures, the economic figures, are starting to kind of leak and not look so healthy. And so I agree with you. I think we're in the beginning of a recession, and it's going to happen, right? So a whole nother discussion is what do you as a person or your family, what do you do about it, right?
Mm-hmm.
Well, you probably should be, if you have an advisor, you should be talking to an advisor. And there's some issues. Now, in the next podcast, we're going to be talking about specifically how the economy relates to the stock market and what's going on in the stock market now, and how that's the same as sometime like 2008 and how that's different from 2001 and so on. So each economic cycle has some uniqueness to it, but they all start at the peak, they all go to recession, they all end at the trough, and then they start to go into recovery.
Right. So right now,
let's get it
over
with.
You expect that we're more in the bear market, or heading that way than we are.
A true bear is when you hit a sustained 20%. Right now, as of right now, the Dow Jones is down 11%, and the S&P 500 is down 14%. Now, in the next podcast, we're going to talk about what that means. Why is the Dow Jones different from the S&P 500, and why should anybody care? So that's going to be reserved for the next podcast.
Now, to finish out this podcast, though, why don't you talk a little bit about the CPI and where we're at right now, Consumer Price Index?
Okay. First of all, I think it was back in the Clinton era, they decided that they didn't like how we were figuring inflation and the Consumer Price Index. So they took food and fuel out.
Oh, as if that does not matter to the average American.
Who cares about food and fuel, right?
Okay.
Yeah, so right now the Consumer Price Index is 8.5%, right? Inflation, right? And the Consumer Price Index has raised like 274 points. And we won't get into, what that exactly means. Just know this, it ain't good.
Well, it's not good, and it's actually it's the highest it's been in 40 years, and this has happened in less than 1 year.
Yeah, so the 8.5% inflation that we're talking about, if you talk to somebody that really, if you throw back in food and fuel, it's really more like 15%. So if you're talking to the gold and silver broker, they're quick to point that out, because when it comes to things like gold and silver, they tend to hold their value over time more. And so some would say that if you were going to ever be a gold bug, now's a good time to be one, right? So that's a whole nother subject, and we've talked about that, before. So just to kind of wrap things up, Karen, I agree with you. I think we're in the beginning of a recession. I keep hearing saying, are we going to be in a recession? The talking heads, are we entering into a recession? I'm just going to tell you, and you can quote me on this, and you can record this and play it back later. Yes, we're already in one. We're starting one. We're heading towards a bear market. That's my opinion. So you need to be, if you have an advisor, talk to one. If you don't have an advisor, hit us on the web or go to kpcfinancialsolutions.com and we can, have a private conversation. So Karen, we're out of time. We're going to get into the next podcast. We're going to get into how the stock market relates to
the recession,
and inflation and all those different kind of things. So bless you. We're done with our podcast this time, and we'll be back next week at the same time.
You've been listening to the KPC Smart Money Podcast with Kevin and Karen Christ. To listen to more episodes, visit kpcsmartmoney.com. You can also find the KPC Smart Money Podcast on Apple Podcasts, Google Play, Spotify, and Stitcher.
KPC Financial Solutions is an independent financial services firm that utilizes a variety of investment and insurance products. Investment advisory services offered only by duly registered individuals through KPC Financial Solutions, LLC, a registered investment company. Investing involves risk, including the potential loss of principal. Any reference to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying ability of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. KPC Financial Solutions is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by KPC Financial Solutions. Hypothetical examples have been provided for illustrative purposes only. It does not represent a real-life scenario and should not be construed as advice designed to meet the particular needs of an individual's situation.